Over the past 2 weeks, we have seen a re-steepening of the yield curve. And why that matters and how we might be able to profit from that, I'm going to lay out to you quickly here in this video. If you look at the chart here on your screen, you'll see that blue line, and that blue line essentially represents the difference in terms of yield between, let's say, a 10-year US Treasury note and a 2-year T-bill. Typically, you tend to see this blue line upward sloping, but you can see it remains downward sloping because the yield curve is what's called inverted. Basically, shorter end yields are currently giving us more yield than longer end bonds. But I think that is going to change here. It's in the process of changing already. And you can see we are witnessing this blue line breaking back above that yellow trend line. And I think it's a sign that we're going to start to see a couple things work. One of them, and this is an easy one, I think a lot of people know about, is the XLF ETF. This represents the S&P 500 Financial Sector ETF. And this is a sector that is in our trending work is already very bullish. The financial sector, the XLF in our market rover trend following software is notably bullish. And I think it's a matter of time until we start to see some sort of a breakout here. And again, some of this would be due to this yield curve re-steepening as we saw here on this chart. The other one that's a little bit less known, or maybe a lot less known, but I've mentioned here several times already this year, is an ETF by the ticker symbol of IVOL. And without going into too much detail, because we can get quite geeky with this, of what it really represents, what I can tell you what it represents is basically the yield curve. So if the yield curve re-steepens, so back to a normal shape, which is what I just showed you before in that chart with the blue line, then this ETF, IVOL, should also go higher, and quite frankly, meaningfully so. So to give you an idea, for this IVOL ETF to go back to, let's say 20, which is essentially where this thing was literally just in February, it really would be a pretty small move. All things considered, and that would represent about a 7 or 8% rally in the ETF, and from there, once it re-steepens, it can go a lot higher. So just something we're watching. Now, of course, this week we are all about trend following and trend changing. That's our topic this week. This is a trend that I think is in the process of changing, and I'm going to show you guys how we can find trends like these when they're changing using our market rover software. Make sure you join us for that this week in our free research call. You can sign up down below or on the next screen, and I look forward to welcoming you there.